My name's Nick Brown. This is Brian Kaley. Today we're going to go over the market forecast and where we're at today with a quick market update. So let's jump right in. First thing I want to talk about is what's happening with interest rates, and specifically how inflation is finally getting those readings we've been waiting for, which is pushing our rates lower. So over the last week, we've seen a vast improvement in the inflation readings. We thought this was going to happen back in May, but it's actually happening now. Turns out rates follow inflation. So when inflation goes down, rates will follow. And that's exactly what we're seeing. We've got some really good core CPI readings, some PPE readings, and some of the other major inflation indicators have really come out and been favorable. What is the result of this is that the rates have come down about 0.5%. Where were we, though, is the question. We were actually at some of the worst rates over the last 2 weeks of where we've been in the last decade. So we were low to mid sevens, some, depending on the product and your credit and all that. Some people were getting into the sixes, high sixes, but basically what's happened is now over the last week, we've seen such an improvement that rates have actually come down about 0.5% from their highs. So that's good news. So where is it going? What's the forecast of what we can kind of expect rates to do for the next 6 months to a year? Well, as these inflation readings come down, we should expect to continue to see rates to come down. So over time, that's probably what we're going to see. Now, it's not a guarantee. Things happen, wars, uncertainty, market corrections, and all the things we don't necessarily, we can't predict exactly. But in general, over time, rates should be hopefully peaking and now coming down the other side. Now, again, just remember, every day rates are moving up and down. So there's a good chance that one day it may actually go up again. We could see higher rates in the near term, but over time, I think we've really turned that corner and we've come over that lip and we're on the way down. Reminders is that there's a lot of people waiting for interest rates to come down. There are a lot of people I like to call sideliners. Basically, they're sitting out there waiting for rates to be more affordable so their payment can be more affordable. And some people even think housing is going to go down in price. We haven't necessarily seen that. But a strategy to keep in mind is as rates do come down, a lot of people who've been waiting are going to jump in. So that's going to cause a lot of demand, and supply is not going to increase. So when demand goes up and supply does not, we see prices go up. So my suggestion would be jump in sooner than later. Don't wait for everybody else to jump in, and probably right around now is probably a good time to consider jumping in, because if you're late and you're jumping in with everybody else, it's going to be back to 2020 days when there are 200 offers on every home and you had a less than 0.5% chance of getting into a home. That's not the case right now. You can get into homes currently. So I'm going to pass it over to Brian. Tell us a little bit about what you've got.
Yeah, I'm going to go over some basic numbers of the current market overall. If you're thinking about, hey, is now a good time to buy? That can be a really good time to buy depending on your situation. Getting in right now, inventory is actually lower than it used to be. It's down year over year in June. It's down about 21%. So inventory is a little bit lower, although we're still seeing a lot of multiple offers on good properties. It's kind of interesting the way that works. Days on market are right around 23 days, and that's across the board. This is metro-wide, and that includes everything from single-family condos and townhomes. So then homes sold, average home prices are down about 1% from 736 down to 730. So not a huge number. But the good news about overall the market, inventory, and everything else, if you're a buyer right now, get out there and look. There's still good inventory that you can look at, and those sellers that are selling are probably motivated to a certain extent. They have different reasons for whatever that is, but you can, negotiate having them help you buy down rates. You can get incentives for closing costs, etc. You won't have the competition either. In some cases, we're seeing multiple offers, but it's a small number. Most of the time, you might go up against one other person, or it's just you. So yeah, it's a good time to buy, and inventory will increase, especially if the rates are come down a little bit. People are going to jump off that fence, especially before school. I think a lot of people are going to make that move.
Well, and I think a lot of sellers, there is a good chance that we do see more supply come into the market, more inventory, because a lot of sellers have been waiting to sell because they don't want to trade their super low interest rate for a higher one. So once rates do come into a range that isn't so painful on that next house's payment, they're going to be willing to do that. Although some people might, on the flip side, we don't know what's going to happen exactly, but a lot of people are going to say, hey, I have this house locked in at 3%. Maybe I won't sell it. Maybe I'll just take some equity out of it with a HELOC and use that equity and go buy another house. So we could still just see a trend where people aren't selling as often because they've got such a good deal and they know how they can cash flow on that exiting primary. And so we might not see a whole lot more inventory either.
Right.
So it's, two pieces of that coin. Rates are helping and hurting the inventory at the same time.
Well, and people have gained so much equity over the last few years. That makes sense if they're going to just pull it out and use that as a down payment.
And just on Monday, I was talking with a friend of mine, and he was doing this exact scenario. He was like, hey, we have a great rate. I think we can rent because rents are up so much. And he had bought his house like 5 years ago. And so his payment's like $1,800 and he can get a rental income of like $3,000. So why would he sell? So he's going to get a home equity line of credit, or they're going to figure out a way to get the down payment for the new home, but they're just going to rent it out, and it makes a ton of sense to do that.
It makes sense all day long.
We might see a lot of that, so don't expect that a ton more houses are going to flood the market, but we should see an increase for sure.
I agree. I think it'll be a good fall, good end of summer prior to school and all that. And I think the overall housing prices are still increasing. They're going up 0.5% a month in most cases.
I think what people need to remember is there are, overall in the U.S., there are areas that people are moving to and areas that people are moving from. And Denver, historically, at least for the last 15, 20 years, has been a place where people want to move to. Now, we have seen a negative outflow of people this last year because I think we have hit a little bit of a critical mass, but it doesn't mean we're like the negative outflows of some of these other places like the Midwestern cities that are seeing mass exodus. What we're seeing more of is people that are natives who no longer want to live here because it's priced out and maybe the demographics of the people that live around them has shifted. So I think we're always going to have a pretty decent demand here in Colorado for that. So just kind of keep that in mind, that don't expect a big house price dip. Out of the last 7 or 8 recessions, only one of the recessions had home prices go down, and that was because that recession was caused by shady mortgage practices. It was caused by the housing market. Plus, we just had a bunch of building occurring. That was a big factor in it too. The supply was so high, and you had these shady lending practices that there were houses to buy, and anybody could get them. So, of course, that's a recipe for disaster.
Yeah. I don't think we'll see the big crash like we did back in 08, 9, and 12. Hopefully not, but and that's a good thing. Overall our market's strong. Interest rates have come down, and we'll be here to help.
All right, guys, if you guys have any questions, please feel free to reach out. We'd love to talk to you. We'll put our contact info below and talk to you soon. See ya.